All right, guys. So I'm gonna be going over what I took on today. I believe today is. Let me go ahead and check my thing. It's Wednesday. I don't even know what month we're in. Oh, we're in November the 3rd. So as you can see, it's creating. It's overall. It's in a bullish momentum, meaning it's going up in an uptrend. So it's creating highs and lows, higher highs, higher lows, higher highs, higher lows, higher high, higher low. So from this moment right here, I'm anticipating the market to respect this area down here, just or around this area, since this is your previous higher low or lower low, however you guys want to basically look at it. I believe the right term is lower low, higher high, lower low, higher high, lower low. All right. So I'm anticipating the market to either hit this area. And as a lot of you know, we like to call it accumulation. Accumulation. I don't know why my computer's so slow, but I wait for accumulation to happen in this area. For me personally, I don't actually take my trades off of accumulation. I tend to wait for reaccumulation. That way I can get into a better trade with a smaller stop loss, better entry, and the risk to reward is a lot better than actually going off of the accumulation. So I am replaying this just so I can show you guys how I actually saw it when it came into the market. So going down to the 1 minute, as you guys can see, I anticipated the market to go bullish because, like I said, overall it was bullish, and I was waiting for the market to basically react off of that area. So as you can see, market at the point where it was, I believe like around 9:22. I'm actually Central Time, so 9:22 for my time, it was actually 8:30 or 8:22. So like I was saying, I was anticipating for market to come into this area. In the area that it was at, it's an area that for me personally, I shouldn't have been looking at it, but you know, me being hard head, I actually was looking at it. But like I was saying, market is going in a bearish momentum, creating lows and highs, as you can see here. It's going in a bearish momentum. It's creating high, low, high, low, high, low. In order for the market to continue going up in a bullish momentum, as you guys can see right here, there is a break of structure. Break of structure, as you guys know, is indication that the market is about to make a different shift, meaning it's going to go from bearish to bullish. So what I like to wait for after the break of structure, I like to wait for the market to literally do the exact same move again. Like I said, I was waiting for price to react off of a lower time, but since it was close to New York open, or the stock open, New York happened a little earlier, but since it was close to the stock open, I saw that break of structure. As you can see right here, this is basically institutionals knowing that there's a lot of people going in for this trade. So as you can see, I see my IPA there, also known as an imbalance. And right below it, you see the POI, point of interest, also known as the institutional candle. So what I saw, break of structure, as you can see, it's not even 9:30 yet. 9:30 is this line right here. Let me actually go ahead and mark that for you. So 9:30, right there, 9:30. I believe that's 9:30. Yeah, that is 9:30. So 9:30, broke structure. And I always say that, like, you literally have to wait for market open, because it can literally either wick you out or it can literally wick down just a little and just take off for that. But like I was saying, it never came down to the area that I was looking for. It never came back down to that specific area that I was looking at, which was this area right here. That's like I said, on the higher time frame. So right at the open, market came down. I was already in the trade, honestly, when it came to this area right here. And then I believe I had it at an all-time high because US30 right now is at an all-time high. So right after that happened, as you can see, let me go ahead and slow this down a little. So it's playing. Let me speed it up. As you can see, it literally took off way before the entry, before the open, already putting me in profit right away, right when I basically pull the trigger. But as you can see, I don't know if you guys paid attention to that, but if you can see, it literally wicked in. Let me go ahead and delete that so you guys can see. It wicked in, literally, like I said. That's why I always wait for the open. Wicked in, my stop loss would have been at this low right here. So it literally wicked in and it took me out. So basically this trade right here, from my entry to right here, 16 pips. If it would have went up there to all-time high, I believe this is an all-time high. I have to go ahead and like basically look it up right now. But it came in, wicked me out, and I was completely out of the trade right there. But waiting for more evidence. So after that happened, let's just play. As you can see, market continued to go bearish. It went up just a little bit, but it gave you an opportunity for a way, way better trade. As you can see right there, right when this happened, I already knew that there was an opportunity for you to go short. As you can see, market came and swept your liquidity, took out some orders, and it left you with a point of interest. Point of interest, institutional candle is always going to be the last push-up candle before your down move. So this candle right here was a POI that I was looking at. So after it swept liquidity, like I said, I was looking at this area right here, and I was just literally letting time do its own thing. I set a limit because it was already early. I had got clapped, and I was like, well, it's time for me to just get out of the computer. But I set a limit. You can either put your a stop loss real tight and put it right here, or you can do it up here at the 28 at this high. So in total, it was 28 pips that it went down to. I mean, your stop loss. But I tend to use the Fibonacci a lot. So going from this high to the previous, I mean, the most recent low, which I don't believe that was the most recent low. And then I did it wrong. So I believe like around there, my actual entry was at 786. So at 786, that's when I actually pulled the trigger. I tend to not take limits. I don't really do limits all the time, just because US30 tends to move real quick and it can literally wick in and just take off. So as soon as it got to that 786 area, or in between this candle, that's when I pressed, I usually just pull the trigger. I don't care about my stop loss as long as I have one there. So what happened, let me go ahead and speed it up just a little bit. And then just to let you know where exactly my TP was in between this area right here. As you can see, I would consider this right here. I don't know why my computer's tripping like that, but I would consider that right here some liquidity that needs to be captured. But like I was saying, this was an opportunity for me to see if market was going to create a low, respect this area, because like I said, overall market is bullish. If it didn't respect this area, then I knew market was going to get ready to shift and take a big dump. But it ended up respecting this area, as you are going to see right now. So my TP was around like above here, I believe, at almost 116 pips. So let this play out. Market literally did its thing. Let me go a little faster. As you guys can see, market went into my entry, came back again just a little bit. Honestly, a lot of you could have really taken another trade through here. If you're looking at this last push down candle right here, there's some liquidity. Literally everything happens more than once. So you see liquidity in this area, same exact thing. What took it out? This institutional candle, this candle right here. So as you can see right here, my entry was a total of 22 pips. But if you would have took it from this entry, from this candle, literally that institutional candle, to this area right here, that's only 7 pips. A 7 pip stop loss compared to my 22, you have a bigger lot size and a smaller stop loss. So meaning you're going to be able to make a lot more money, especially with US30, depending on your broker. I use Prosperity 4X. It's literally I believe my contract orders are 100. So if I'm only risking 7 pips, I can drop a bigger lot, and then the reward is a lot better too. So like I said, market came in and literally it did its own thing. Came in there and it went into that area that I was looking at. As you can see, pay attention to this area right here, and boom, let's look at that right quick. So as you can see, it came into that area that I was looking at, hit profit. But look at this. Like I said, overall, market is bullish. So yeah, you did take this trade and you profited, let me see, 111 pips. I mean, you do the math. But if you're paying attention to this, like I said, market is overall bullish. So what are you going to mostly look for? Buys. So like I said, market is coming down, bearish momentum, creating highs and lows, highs and lows, low, high, low, high, low, high, low, high, low. What happens here? You see another break of structure, broke structure. And what happened right after? Market wick down. As you can see, you have imbalance. And what's right below it, you have this candle right here, which would be known as your point of interest, the institutional candle. And where is the liquidity? Right here. It's super easy once you understand that concept, guys. So what happened? The liquidity got swept. You broke structure up in the and from the bearish to the bullish. So break of structure, like I said, it gives you that identification that the market is going to make a complete shift. So what happened after? Literally wicked into that entry of my POI. So let's go long. Stop loss was 11 pips, 12 pips. And from this right here, this trade on its own, this is where I was targeting my all-time high. So I would target all-time high at 186. But this is what I like to do because I know how the market moves. I know how it is. So right after that all-time high, like I said, I would have my profit at the all-time high. As you can see, price ended up going all the way. As soon as it hit that all-time high again, and it broke just a little above it, I didn't completely get off of the trade. I closed the trade 80%. So I just literally left it. I closed and broke even, or I even decided, I believe right now I have a stop loss in the in profit. So in case it does return, which I mean, it will if you leave it there for a long time, if that makes sense. But it literally just it kept on going, kept on going. So like I said, I closed profit literally at the all-time high. Then I left 80%. I took profit with 80%. So 80%, and then I left 20% still running. So as you can see, let's go to where time is right now. It's literally a lot higher than where it was with US30, even with a 0.01. This is a lot of money, especially if your contract orders are still, like I said, my contract order is 100. So with this move right here, it's an easy $200, $300, $400. And let's see how far it went out. So it went and touched a total of 290. I believe right now it's sitting at 241. But honestly, it can get you prepared for London session. It can be a possible another buy entry around somewhere around here, around this area. If not, it can happen during New York. It can come in through this area right here. As you can see, you do have imbalance. You do have a POI institutional candle. But I really don't like to take trades on London just because I like my sleep. And then on top of that, I only trade New York. So if I don't see anything in New York, then I don't really trade. I did have to wait a while, like around, I believe 10:35 for me to take this trade. After it hit that TP, I was already looking for that buy opportunity. So as soon as that TP got hit, I started looking for evidence for the market to go the opposite direction. As you can see, the market did go the opposite direction, and currently floating, like I said, 235 pips. You do the math, you should know how much money you would have made off of that. But like I was saying, it's that simple. I always wait for New York. Always wait for New York. Yeah, as you can see, gave you a literally a good buy opportunity here. And this right here, this indicator, shout out to my mentor, John Fibonacci. For you that don't know, I am a part of IMACADEMY. I do not do the business side where you recruit people, but they do have a good educational platform. So if you get connected to the right educators, you can get connected to the right way of learning how to trade. There's different ways, but I believe that this is a good way to learn how to trade because you're not getting into 50 pips, 80 pip moves. You're getting into these big plays where you literally only have to take a trade once a week and you're good for the whole week once you get that experience. So this is not really an indicator, but it's just showing you London Open and New York Open. So with indices, New York tends to mitigate off of London. So going over, for the people that are in IMACADEMY, going over the bounce back course, you get to see a lot of this stuff. And shout out to my mentor, Matthew. If you're watching this, you literally showed me a way to literally double, triple my income within months. The way that I've learned how to trade has been awesome. It's crazy. It's like I said, I've been doing it for 3 years. I really didn't take it serious for my first 2 years just because of the job that I was at. I mean, I was making good money. I didn't really want to basically do anything else just because I thought that was it. That was it for me. But as soon as I lost my job, during COVID, I literally told myself I really can't rely on a job. So I took this serious, and as you guys can see, if you can teach it, then it'll help you out even more, because that's just the way it is, honestly. If you can teach it, then means you're doing something right. So that's pretty much it. I was just going over the trades that I took today. Just little buy opportunity right here. Went and ran 116 pips, 111 pips. And then obviously this one right here, right now, it's currently floating like 235 or 290. So, I mean, if we're doing the math, 290 plus 111, that's 400 pips. 400 pips, I believe, on a 0.1, that's $400, I believe. I don't know, but I have it on my phone. I take my trades off of my phone. I do have my laptop next to me, and I do have sometimes my iPad, but I tend to go off of trades on my phone just because I'm quicker on my fingers. So I get to press the button when I need to. And well, yeah, that's pretty much it. Thank you guys for watching, and I'll talk to you later.